Welcome back. If you're following Lucid Motors, you'll want to hear today's full update. We've got a lot to break down, from technicals and sentiment to market forces and some unexpected commentary that's impacting the stock. Lucid stock has taken a hit today, dropping about 3.43%, currently hovering around the $2.67 level. On the day, it traded as low as $2.65 and touched a high of $2.67, so it's been bouncing around within that range. Clearly, Lucid isn't keeping pace with the broader markets, which is disappointing considering the positive economic news pushing other sectors higher. We've seen solid data across the board: composite PMI, manufacturing numbers, services, and jobless claims all came in better than expected. That should have injected optimism into the markets, and it did for most stocks. But Lucid, not so much. Let's talk about two things that might be playing a major role here. The first big factor is regulatory. About a week ago, I mentioned how GM has been advocating for the removal of California's EV mandate. Now it looks like that proposal might actually move forward. That's a major development. While Tesla seems unaffected, likely due to their brand strength and dominance, Lucid and Rivian are both taking a noticeable hit from this news. Why? Because the market sees these mandates as a critical support system for newer EV manufacturers. Without these incentives, there's concern that consumers won't be as motivated to choose brands like Lucid or Rivian over legacy automakers or Tesla. Is that a fair judgment? In my opinion, not really. But the market isn't always rational, and right now, it seems to be reacting on gut sentiment rather than fundamentals. The second factor is media influence. Believe it or not, Jim Cramer recently weighed in on both Lucid and Rivian. While he technically labeled both as buys, he made it pretty clear that he leans more toward Rivian. That subtle favoritism might seem minor, but remember, Cramer has a large audience, and in many online circles, there's a running joke about the inverse Cramer effect, meaning whatever he recommends, people tend to do the opposite. Could that be partially responsible for Lucid's dip today? Possibly. Even if it's not the sole cause, it may be compounding the negative sentiment. Let's take a deeper dive into the short interest. Today, shorts have increased their positions by around 1.42 million shares. That brings the total short interest to 28.62% of Lucid's free float, or roughly 352.97 million shares. That's a big number and suggests that traders are doubling down on bearish bets. What's interesting is that just yesterday, short sellers were pulling back, covering their positions. But despite that short covering, we also saw big institutional bets via the options market against Lucid. So it's a mix of signals, and clearly the bears aren't done yet. In today's options activity, calls totaled about $659,000, while puts came in at $142,000. That means 44% of all options today were bearish. Now, while that's significant, it's not nearly as extreme as what we saw yesterday. There's no clear, all-in move from big players, but caution is still in the air. Bulls are still seeing upside above $3, while bears are targeting sub-$2.50. With Lucid currently at $2.68, it's caught in the middle. Speaking of prices, some technical levels are worth keeping an eye on. Support at $2.62. This is going to be crucial. If Lucid falls below this, things could get rough. Resistance at $2.74. That's your next key target if Lucid makes a run upward. Additionally, in the options world, open interest is building at $2.50, 3K contracts, $3, 28K contracts, $3.50, 13K contracts. If any sort of positive catalyst appears, say a new partnership or production milestone, we might see a quick squeeze toward the $3 range. But that's a big if for now. Another thing dragging Lucid down: institutional selling. Most large trades today over $100K have been sells, with only one buy order showing for $833K. That lack of buying pressure speaks volumes. In the dark pool, volume has also been on the lower side. When combined with slower retail activity and cautious institutions, this suggests that buyers are waiting on the sidelines. No one's rushing in to save the day right now. Also important to mention, Lucid hasn't filed anything with the SEC, and there's been no new press releases, no official news, no analyst upgrades, nothing. It's radio silence from the company, which isn't helping confidence levels. Even major news outlets aren't saying much about Lucid today. Most of the EV discussion is still focused on the broader California ban and its implications for gas-powered vehicles. Technically, Lucid's chart remains wedge-bound, trading between its 100-day and 200-day moving averages. If that $2.62 level breaks, expect it to fall toward the 50-day average, which is a significant level to watch. Some traders believe short sellers are pushing Lucid down slowly, targeting key technical levels. It might even be part of a broader play, especially considering how aggressive traditional automakers have been about getting EV mandates removed. Legacy brands like GM might prefer to eliminate the competition early before Lucid or Rivian gain meaningful traction, and removing regulatory incentives is one way to do that. Let me ask you, what's your take on all of this? Are you buying the dip? Sitting on the sidelines? Or do you think there's something fundamentally wrong with Lucid? I think the last few days have been more about sentiment manipulation than actual bad news. We've seen some solid developments recently. Lucid's production facilities are active, and the Gravity SUV is moving closer to launch. But until the company proves that it can ramp up delivery numbers, investors, myself included, are watching cautiously. There's potential, but potential only takes you so far without action. Institutions are likely thinking the same way. So what do you think? Is Lucid a long-term hold? Or are we still just floating in an EV hype bubble? If you found this video helpful, please give it a thumbs up and consider subscribing to the channel. Your support helps us continue to bring you in-depth market analysis. Thanks for watching, and I'll see you in the next video. Take care.